SPX6900 looks like the ideal meme coin. It's got support by some very large influencers. It's got some catchy phrases like "there is no chart" or "believe in something." It seems like there's some culture behind this, but the question is, even though the price was rallying quite a bit in the past, how much higher can SPX6900 go now? Let's have a look at the on-chain metrics. Let's have a look at the data most people are not considering. Now, this is not the first video on SPX6900 on this channel. I publish videos regularly and I started when the price was still very, very low. The first video was published 306 days ago. And interestingly enough, it got a similar amount of views as the recent videos. But of course, it's always better to be early. The first video was published when we were still below 11 cents. And here we are today, close to $2. So if you want to be early next time, feel free to subscribe over here. I publish videos early on various cryptocurrencies regularly on this channel. Now, this crypto channel is very different to the other channels on YouTube. Most other channels just discuss the public data. They just discuss what's on the website, etc. But especially for meme coins, this is useless information. Meme coins is player versus player. It's all about who can time the market better, who buys earlier than the rest, and then exits on time. There's no value creation happening in the meme coin space. And so a central question with any meme coin is always, how much more upside is there potentially? And market caps give a good gauge how high something could potentially go. This is an overview of various meme tokens across all kinds of chains. And number one, of course, is Dogecoin with a market cap of 33 billion. SPX6900 is at number 7 and it's got a market cap of 1.8 billion. Now, will SPX6900 flip Dogecoin anytime soon? I doubt it. Could it grow larger than Pudgy Penguins? Potentially. Could it flip Pepe? Potentially. With Shiba Inu, it probably gets a bit tough. Dogecoin and Chip have been number 1 and 2 for a very, very long time. So this gives us a first idea how much higher SPX could potentially go. More than a 3x will be quite hard. So that's roughly $6. The token is on various chains, but still most liquidity is on the Ethereum chain. It's the 4th largest token in terms of liquidity. There's 28 million. On the Solana chain or on the base chain, we do not see SPX6900 among the trending tokens if we look at liquidity. Now, there's quite a strong misconception with the recent rally in altcoins, including SPX. In the last month, we went up by 69%, but this was actually not just because of SPX investors suddenly getting excited about the asset. The main reason why SPX6900 went up is because Ethereum appreciated during that time frame. It went up by 57%. And yes, SPX did outperform, so there were some purchases of SPX, but really the majority of those gains is simply the market as a whole going up. Because here's how altcoin trading works. Altcoins are coupled in liquidity pools. So the price of an altcoin does not get determined in US dollars directly. It gets determined by its ratio in a liquidity pool versus wrapped Ethereum. So we don't need a single transaction to happen on the chain for the price to go up. It's the ratio between SPX6900 and wrapped Ethereum that determines the US dollar price. If wrapped Ethereum goes up by 10%, then automatically, without a single transaction happening, SPX6900 also goes up by 10%. So there's a direct spillover effect. It's just the ratio between the token and wrapped Ethereum that determines the price. And so really, the market is confused. This is not an altcoin rally. Yes, everything is green in the last month, including SPX6900, but the only reason for that is Ethereum. And Ethereum is going up because it gets purchased massively by Wall Street. Have a look at this. An Ethereum ETF supply absorption of 20% annualized if the last 14 days are representative. So the Ethereum purchases heated up massively, thus pushing up in extension as a ripple effect the altcoins as well, including SPX6900. That was the main driver for the price rally recently. Still, let's have a look at the on-chain metrics. Let's see if there's more and more retail investors buying in, if the whales are buying in. Let's see whether or not the SPX token can outperform Ethereum in the future as well. Now in total, we've got 45,000 holders. What we see here on the left on this chart is the number of wallets that hold at least 500 tokens. So at the current price, that's $1,000 worth of the token. There are not 45,000 such wallets, there's only 17,000. So the vast majority of wallets has less than $1,000 worth of the token. For the chart in the middle, we go at 10x in minimum holding. So that's now $10,000 worth of the token. For the chart on the right, another 10x, that's $100,000 worth of the token. Let's go even higher. Here's $1 million worth of the token, $10 million worth of the token, and $100 million worth of the token. What do we see across those charts? It seems like the higher we go with the minimum holding threshold, the less clear the long-term accumulation trend is. It seems like the whales tend to rather dump, they go down in number, and small retail just buys and forgets. So the higher the holding amount, the more active the trading, and the more pessimistic potentially the investor. Now that's not necessarily that great, right? Because the whales on average tend to make the better calls, right? Capital concentrates towards the people with more skill. Crypto is a game of both luck but also skill. So the people that have more capital tend to also make better calls. If the people with most capital tend to sell, it's not good. What I also don't like about those charts is that the number of retail investors isn't growing anymore. And that's probably the main reason why the whales are exiting. But in the short term, the price discovery doesn't really happen on the blockchain anymore. There is spot trading volume on the centralized exchanges. So we've got 28 million worth of trading volume in the last 24 hours on Gate.io. But we've got almost 4 times as much trading volume on the perpetual futures. So that's now the levered bets on the price. There's $105 million worth of trading volume here. And so really, when there's no more buying pressure on the spot market, when all of the price discovery happens now on the perpetual futures, this is what we have to zoom into. Sometimes the perp traders are very bearish. That's when the funding rate is negative, when this is red, when the shorts have to pay the longs in order to bet on falling prices. Most of the time, the perp traders are bullish. So the longs have to pay the shorts in order to get more price exposure, to pay for the leverage. Currently, most people are still betting on rising prices. But here's what I don't like. I don't like the correlation between the SPX price and open interest. So open interest is how many bets are currently on the SPX price. And that's close to 200 million, and that is correlated with the SPX price. When there's more bets, the price tends to be up. When there's less bets, the price tends to be down. And we are very high on the amounts of bets, with potentially the tendency to now decline, which would push down the price. We've got a similar connection with trading volume. The trading volume is rather elevated right now and has the chance to further fall. And the liquidations are somewhat in balance. So there aren't too many liquidations, neither on the long nor on the short side. But if you look at the SPX6900 price relative to Ethereum, since it was listed on the centralized exchanges, then I'm not sure if this is the best time to buy. We are not necessarily super heated, but we are also not incredibly cheap. And given that there's so much leverage now in the price, and given that the upside is limited because the market cap is already quite high, I think it's better to stay away for now and wait for another entry opportunity after a dip, or potentially if we suddenly see a rally, to then enter maybe even a short position. Because once the market cap is at 4 or 5 billion, that's where most altcoins tend to turn around. That's where most meme coins tend to then deflate. That's in general a pretty good trade, betting on falling meme coins as they go very, very high in market cap, because at those higher market caps, it's very hard for the market manipulators, it's very hard for the market makers to manipulate the price further up. And at those prices normally make sense just in terms of risk versus reward to then bet on falling prices. But we are not yet there. We are still at 1.8 billion. That's not at a level where we have to bet on falling prices. Yes, open interest is high, but it could potentially go even higher. I want to see a clear downwards trend in the bets on the price first. This could still just be a random noise. It could still just be the volatility of the day. Now, I'm trying to approach this channel here slightly differently to other crypto YouTubers. Most crypto YouTubers, they take money from other crypto projects, or maybe they buy into a small crypto project. They have some vested interest and then afterwards promote it on the channel, and then potentially with all of that additional interest, which pushes up the price, they then dump on the following. I never do this. I never promote any individual cryptocurrency that I previously bought. I also never take any money from any crypto project. I try to be as neutral as possible. I try to have no conflict of interest here. Most other channels also don't show their trading history, as in how successful are they. And they're also not willing to share the trades in real time, maybe allow for copy trading. But I'm willing to do this. This is my personal return, so that's the black line, relative to if I had just dollar cost averaged into Bitcoin. That's the light gray line. This is a monthly chart, so this is roughly 4 years of data, a bit less than that. And this outperformance here comes from relative valuation bets, right? We talked about this several times on the channel. Most altcoins tend to do worse than Bitcoin most of the time. And we can make money from that, right? From all of that token inflation. When the insiders dump on the retail investor, when the KOLs dump on the retail investor, when the early venture capitalists, when they get their token allocation and then dump on the retail investor, then there's actually a chance to make money from that by betting on the altcoins to do worse compared to Bitcoin, Ethereum, and Solana. Because Bitcoin, Ethereum, and Solana doesn't have that much token inflation. All those smaller, crappy altcoins do. And so long term, they tend to just do worse. And so I made a lot of that outperformance with borrowing and lending platforms. So I borrowed a bad altcoin and then swapped it into Bitcoin, Ethereum, and Solana. That's how I made this delta. I then moved over the strategy to perpetual futures. I did this for 2.5 months. And that worked out even better. I did this with some experimental money, 40K, and it returned almost 50% over those 2.5 months. Of course, there's some volatility in this, but still 50%. And so as I did this and as I shared my trades in real time with the premium members, I got more and more requests. Can't I just open a capital pool? I deposit to that pool and you do the trading for me. And I finally just started that. So this is now 6 days ago. We started the copy trading vault. It's already up 3.5%, but of course we don't know how this develops long term. We are now moving more capital, but I'm offering this to the annual subscribers of premium. So there's a dedicated tutorial how to deposit to the Bitcoin strategy copy trading vault. That's on the platform called Hyperliquid. It's an 18-minute video. It explains everything step by step. And then you don't have to follow the individual trades that I share, but instead you just get the exact same performance that I get. Both the gains, but also potentially the hard times. Nobody knows how this is going long term. It worked very well with borrowing and lending platforms. It worked very well on my first test initially. And I'm working hard that it will continue to work as I'm trading with your capital. But yeah, you can still execute the trades yourself. I'm still sharing this all in real time in premium. You can also discuss potential opportunities with the community. Right here are some example trades. But the active approach is for people that don't have as much capital, but that do have some time. So that's for the monthly membership. That's currently at $125 per month. If you don't have the time, then you can simply subscribe for the yearly membership. Then I will send you all the information how to enter the copy trading. And that's for people that have more capital, but of course less time. The yearly membership, by the way, also saves some money, $250 per year. So you're only paying for 10 out of 12 months. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.